Yo, yo, yo. Welcome back to the channel. Hey, so we got an update here for AMC. We're going to talk about the price action, what's going on with it, and just kind of address some of the concerns that I'm seeing in the community as a result of today's price action. I know that from a cycle perspective, a lot of the narrative on Twitter was talking about today being a big day, us moving up. And last night's video, I did kind of agree with it, but also I did have a little bit of hesitance towards it just because I was noticing, that we had this kind of long-legged doji candle, which was kind of a reversally candle. And then also, I don't know if I mentioned in the video, but we had this higher volume here on a red day, which is generally a sign that bears are garnering a little bit of control. So I mean, does this like break the cycle theory? I don't think it does, and I can talk about that briefly. But more, I just want to talk about the technicals of what's going on. Maybe apply some Wyckoff on a shorter time frame and explain a little bit of the ideology and what might be happening with it. So if you like the video, make sure you drop a like, drop a comment down below. Let me know what your thoughts are. And if you aren't already, subscribe and turn on your post notifications so you don't miss any other uploads. I'm also going to do another video where I talk about identifying distribution patterns because I've seen some really big breakdowns today. Peloton after hours is breaking down horrendously. Pin Gaming broke down today. And so I'm going to make another video about that. So if you don't want to miss it, make sure that you, subscribe and turn on your post notifications. It's going to be really useful information. But yeah, so as of right now, I mean, look, overall, my sentiment is the same, right? We, to me, in my opinion, are in a clear accumulation schematic. We have a selling climax here, sell test in phase B. We have an automatic reaction to that selling climax. I think that this is a last point of support that we're in right now. And honestly, I think that, that we just passed through, and then there's another last point of support. This is going to be your phase D last point of support. The way that we're breaking down the phases is this pretty much is your phase D, I think. This is your phase C. And then this is where your phase B began. That's how I see it, at least. And if you're not familiar with Wyckoff, basically, Wyckoff accumulation schematic, and if you want to see one, I'll show it briefly here on the screen. I'm going to take it off quickly, though. But this is accumulation schematic 2. There's another one that has a spring in phase C. But basically, the idea is it's institutions controlling the price. And in the accumulation phase, it's a bullish institution that's controlling the price, keeping the price in a trading range. In order, and they're driving the price up to get retail excited before they ultimately sell the price down so that they can accumulate more in preparation for a markup rally. So you can see that in phase E on the schematic in the bottom right. That would be your markup phase, and I believe that that's the phase that we're nearing. Let me pull it up one more time just so you see. And so what I think is going to be happening, and I'll combine this with cycle theory just to like put a bow on it and tell you why I think that bullish institutions are in control. But the first thing that you want to take a look at is the volume has generally been trending down as we've been in this consolidation phase, right? So as we've been trading from here to here, volume has been in a downward trend. And the reason that that's bullish is it's a sign that institutions aren't really looking to sell the stock as much as they're looking to buy it. And you can see that on the price rallies, normally when the price goes up significantly, it has more volume on that relative high than it does on the next move down. So like this candle here would be like this red candle for volume isn't very good because it is relatively high, but it is still lower than this green candle. And this trend you can see kind of continues. Now we did have a break here where the bearish volume actually outdid the bullish volume yesterday. And so that would be a pretty good signal that maybe bears are in control for the short term. And so what does that mean? Like, what am I trying to say? Well, what I'm trying to say is, I think, in my opinion, what's happening is bears are essentially taking their last gasp here. This is their last move, and the reason that I think that this is a strong last point of support is because it's a heavily traded range here at this around $40 level. You can see that this dotted line tends to send price up or down. And right now we're pretty much holding it as support. And this is, I mean, it's a range, right? But just consider it the $38 to $40 region. And I mean, I'm seeing this as significant support that we're battling for here, creating somewhat of a bear trap scenario. And this is if you're looking at Wyckoff, this is the composite man essentially, trying to get the last weak hands of retail out. He has established confidence in the stock. You can see that on these price rallies. He knows that buyers come in whenever the price rallies. And then whenever the price is going down, sellers don't really get too excited and haven't really gone too crazy since the rally in June. So that's a general trend that you're looking for. The volume decreasing as the price decreases. So to me, I don't think anything has changed. And I mean, always with cycle theory on the channel, we've always kind of gone with a grain of salt because that's not really what I'm about. My main thing is technical analysis, right? It's just that the cycle theory stuff is pretty convincing. I mean, it's very interesting to keep track of. So if you wanted to do a similar layout and just see what's going on relative to cycle theory. And if you're not familiar with cycle theory, the one that I've been following mostly is the one that has been promoted by Esther Nafil, Colin_Gladman. My friend Mocha lately has also picked this one up. But basically, it's the idea that this section of the chart is the same pretty much cyclically, just a little bit different because of time. So like this is taking a little bit longer. This is the same section of the chart, right? And then this is the same section of the chart. And then, I mean, I can also say that, based on this, and you can see the similarities. I'm not going to sit here and line it up perfectly for you. You get the idea. You have a similar setup to what you had before the June run. Even if you look at it from a Wyckoff perspective, right? You have your sell climax, automatic reaction, sell test in phase B, your last point of support, and then your last point of support before you eventually moved up. So, what I will say is that if you look at the previous cycle, let me delete all this first so that I can go back and forth kind of easily and show you. If you look at the previous cycle, and again, in my opinion, things are moving a little bit slower from a cycle perspective, but we had this bump up in this region of the chart, but it had a little bit of retracement attached to it, right? You see that we moved up here pretty significantly over this $10 level, and then we came back down and so this is 4-hour candles. So maybe you would say for about 16 to 20 trading hours, we kind of messed around in this region. And I think that what you're seeing here is possibly just a similar kind of price reaction that you would have seen before here, right? Also, you could probably say that you could probably go back and find that there was a level of support or resistance that was significant here, right? So this kind of $10 region, and ironically, they're nice round even numbers, like $40 here, $10 here, right? So yeah, so I mean, overall, look, tomorrow's Friday, which is like Max Payne Day, so maybe we're flat again tomorrow, and maybe that aligns with my interpretation of the cycle theory that we're actually doing the same thing, we're just moving slower. But I'm not looking for confirmation bias. Overall, for me, I'm looking the same way. The price is retracing down. The volume is lowering and getting weaker and weaker. Bear showed a little bit of strength here, but overall, the trend is the same. And to be honest with you, This is what bear traps are made of, right? Bullish institutions give bears an opportunity, make them feel strong, show them high volume on a sell-off, but it's not really high volume, right? Relatively, you can see, other than this one instance, we've had bullish volume outweigh bearish volume. On price upticks, we've seen the volume go up, and on price downtrends, we've seen the volume go down, generally speaking. So that's basically my update. That's how I'm looking at it. If you like the video, make sure you smash a like, drop a subscribe, and then smash a comment down below, and let me know your thoughts. And again, I'm going to be doing a little bit more. This was mostly an accumulation video. I'm going to do a video that's kind of more focused on distribution. I'm going to talk about other stocks in that video. It's going to be more of a general video. So make sure you subscribe and turn on your noties so you don't miss that one, because it'll be coming out soon. And other than that, have a good rest of your day. Follow me on Twitter at David Marino Jr., and I have a free Discord community you can join down below. Make sure you go hang out there. We talk cycle theory, we talk technical analysis, we talk Elliott wave, we talk all kinds of stuff there. So make sure you go check that out. All right, you guys take it easy. Peace.